And Ashish Kyal of wavestrategy.com join us to give their technical trading ideas on the market and both individual stocks as well. Coming to you first, Ashish, good afternoon and thanks a lot for joining us. We've been facing some sort of resistance close to that 80 mark, and today after the initial up move on the Nifty, we've seemed to give all those gains away and trading at the low point of the day. What's your view on the Nifty? What are the charts suggesting?
Afternoon, Mangalam. See the overall trend for Nifty. If you look from the highs of 8336, it has been down. The short-term trend is negative for sure because it has been making lower highs and lower lows, and 8336 was the level which was 76.4% retracement of the entire prior fall. So it seems that prices are retracing back, and it has been forming lower high, lower lows even on the daily scale. So the medium-term trend is negative. So the line of least resistance is on downside, and the majority of the upside pullback is going to be only temporary. Even today we saw that it came close to around 8080, 8100 mark and reversed from there. It failed to sustain the gap. So as long as 8150 is the short-term resistance, so as long as 8150 is intact, I would suggest that any rallies is going to be temporary. And on downside, the crucial support is going to be towards the 8000 level, which is the psychological mark. And if 8000 is breached on downside, the selling acceleration can increase. So far, mid cap and small cap has not participated on the downside very well, so it is going to be crucial to see how the broader indices perform from here on, and 8000 is the level that one has to keep a watch on over short term on Nifty.
Okay, well, 8000 has been going from strength to strength. What's your call on Dishman?
Dishman Pharma has been a strong outperforming stock, and even given the volatility over past few days or weeks, this stock has continued to outperform. So I would suggest it's in a very strong uptrend, and it's better to stay on the long side in this stock. Stop loss one should use is 370, and the target can be expected at 445, and it has bounced back from the 20 days exponential moving average, which is an important support. So as long as this level of around 370 is intact, I suggest that it can go towards the target level or much higher from there.
And what are the other remaining strategies that you've lined up for us, Ashish?
The other stock which is in buy is TVS Motor. If you look at this stock, it has bounced back very sharply from 220 levels, and it is continuing to make higher highs, higher lows. So TVS Motor looks like promising from here, and one can keep a stop of around 265, and target on upside can be expected at 318 in this stock. The next strategy is on the sell side is Just Dial. If you look at the charts, this stock has fallen very sharply from 1050 level and has now come close to around 800. So it looks like that there is still a few more legs on downside pending, and this is probably the third wave which is ongoing on downside. So Just Dial can be sold with the stop loss of 850 on upside and target of 722. The other call is also on the sell side, so we have two buy and two sell call given the weakness in the market. Batra India has failed to show any kind of an upside momentum. Even when today morning when Nifty opened gap up, this stock did not perform very well. So Batra is a sell, and stop loss on this stock should be maintained at 512, and target can be expected on downside at 462 in this stock.
Okay, well, Krish, you have two more picks. You go. I just wanted a quick word with regards to the charts of IOC as well as GAIL. If you've seen them, IOC is reacting to its numbers, but GAIL is expected to deliver numbers. Your thoughts on both of them technically?
If you look at the charts of IOC, since August onwards, this stock has been moving in absolute range. I mean, 420 has been the resistance on upside, and on downside, it has been taking support somewhere around 370. So unless we see a very decisive break out of this range, I would suggest that it's better to avoid this stock and wait for a clear trend to emerge. And on the other side, if we look at GAIL, this stock has corrected sharply from around 330 and is somewhere around 300 levels right now. So looking at the overall structure, the upside momentum was in overlapping fashion, which is a precursor for a corrective rally, and on downside it looks like more of impulsive. So I would suggest looking at the overall market and looking at the structure, I think GAIL can again resume the down move, but on the support is going to be at 295. So if it breaks 295, the downside pressure could increase. On upside, wait for 330 to take out. So if it is able to take out 330 levels and post results, if it surprises the street and takes out 330, then some upside momentum can generate in this stock.
All right. Thanks a lot, gentlemen, for giving all those